Welcome to the September 5th, 2022 Advance Report for McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman, President, McGowanGroup Asset Management, a team of 10, the team that cares, and this video is proof that we love our clients and we bring you each and every week an update that you can get right here at YouTube McGowanGroup. Be sure to subscribe, you get notification, and especially when we have big market news, and boy howdy, we did this week too. So let's dive right in. This is S&P year to date, okay? Standard & Poor's 500, and that's the blue chip index. The low was about a minus 20-something%. Then we had a nice rebound, and look what happened over the past week. Boy howdy, it looks a lot like that. Well, we're not to this low yet, and we don't know if that'll hold, but that's the premise at this point. This is the Federal Reserve popping off again. They did it in June. And what they've been saying is, we don't know how high rates have to go to control inflation. Basically saying, we don't know what we're doing. Started with Jerome Powell, then Cincinnati Fed President Mester weighed in, then new Dallas Fed President from New York City weighed in with Fed New York President Williams, and they all said the same thing. We don't know how high rates have to go. Mester even said there'll be some unemployment and there'll be some volatile markets, meaning she doesn't care if everybody loses money and some people lose their jobs as long as she can keep hers. Federal Reserve, their job is to define in the short term how far rates need to go. They keep changing their mind because they're stuck in the 1970s. What's the parallel with the 1970s? Overregulation, especially oil and gas and food, and at the same time, profligate fiscal spending by the government. Those are inflation inputs, and that's a mirror of the late 1970s. But I have some evidence inflation has already started to come down, which we'll get to. Here, we've got 3 different commodities. This is so far from this peak. This is the Ukrainian peak. Everything was going to be in short supply, housing on fire, and home prices going up 25% a year. Well, boom, lumber's down 65%. That's a major inflation input. Copper down 30%. Wheat from that point down 43%, and they're rocking along at about where they were last year, or in the case of a few of the commodities, they're well below at the beginning of the year. So what does that mean? Inflation, commodity inflation, has been hit. Oil went below 87. They were building in the fact that the Fed doesn't care if they cause a recession, essentially from their rhetoric, and oil went below 87 briefly this week. So you have deflation in the system. Producer prices in the month of July were actually down for that month, and consumer inflation was 0. So they've already got evidence of moderating inflation. This is huge. See this right here? That means new homes for sale are an 11-month supply. How significant is that? That's the highest since 2007, and housing costs are coming down. What we're seeing on the housing costs with the decline, even in month-over-month rent rates, the rate of increase is coming down. But here I wanted to show you 2 places that haven't worked. One is Bitcoin. That's a $69,000 high on the 1-year Bitcoin, and this week it cracked back below 20,000. So cryptocurrency, that ain't working because the Fed's pulling back liquidity and they're taking that printed electronic currency, they're dialing that back now at $100 billion a month, and the excess liquidity was going to crypto. What else isn't working? This is a sad long-term chart for gold. It goes all the way back to 2008. Well, and by the way, you can see in 2008, it actually had a huge decline at that point. So gold doesn't always work, even when there's turbulence. Then it goes to 1900, and gold fell below 1700 this week. That's huge. What it means is the momentum is against you on gold. Now, top 10, bottom 10. Let's go deep in the market, take the S&P 500 companies, and let's see who's performing and who's not. This is a 90-day read. Top performer, Enphase Energy, solar. Enphase, actually a profitable solar technology component. They make the components for solar. Constellation Energy, 28%. Okay, we can see the pattern there. Now, Cardinal Health up 28%. Etsy rebounding by 26%. And we've got Boeing rebounding by 18%. What's down here? The cruise line's getting smashed up, minus 30% for Royal Caribbean, Carnival down 33%. Those are kind of the meme stocks. Celanese, Dallas-based chemical giant, down 30%. Baker Hughes Oilfield Services down 34%. Newmont Gold down 40% just in 90 days. I'm Spencer McGowan, your financial weatherman. Be sure to go to NetWorthRadio.com. This week's program posted there or on the Apple Podcast NetWorth Radio. You get the program where we titled this week's program Fed Up, and we're going to go deep into what's likely to happen for the rest of the year and some of the things we already know that are going to happen. NetWorthRadio.com, fill out your preliminary client questionnaire, and we look forward to your brainstorming session with McGowanGroup Asset Management, devoted to serving affluent families to help you make great decisions. Thank you for tuning in to NetWorth Media today and our efforts over the past 2 decades to educate clients and help clients make great decisions. That's the reason that we're here at YouTube McGowanGroup, Apple Podcasts, NetWorth Radio, and NetWorthRadio.com. The NetWorth Media effort is designed to help you make great decisions and address value at risk of loss, fluctuation in the markets. Remember, if we talk about a security, doesn't make it a recommendation until you come down and get a plan from McGowanGroup Asset Management, the team that cares. You can set a Zoom meeting or an in-office meeting at the Crescent, and we'll give you a written plan that encompasses what we believe to be the best allocations. This is a team of 10 devoted to you. That includes the research that you see each week from Reuters, from Bloomberg, and from the best sources. We always post links at networthradio.com for what we believe can help you make great decisions, the research that comes up. Now, the NetWorth Media effort is also designed to address cycles in the market, value at risk of loss. At networthradio.com, you can get the ADV form that shows, yes, we're a fiduciary, a registered investment advisor. It covers the costs of hiring our team to help you in the future ahead. It really helps to have an expert team on your side that you can reach by phone, email, and of course, a team that's here for you every week to address what's going on in the markets, because anxiety can often lead investors to make decisions that are either dangerous, chasing things, or selling things when they shouldn't. And that's a big part of our planning effort at McGowanGroup Asset Management. Thank you for tuning in, and we look forward to serving you and your family in the years ahead.